DJ Dark live in session.
This is a voice check. This is a voice check. Could you guys let me know if you guys can hear me a-okay? We have a few interesting things to talk about today, so sit back, get comfy. We'll be starting very soon, and yeah, bring a notepad because you're gonna have to take some notes as well in today's video. I'm gonna try to keep this one quick, but likely gonna fail like I usually do. Nice. Alrighty, I'm just gonna go grab myself a drink as well because I'm likely gonna have a parched mouth in today's video.
Sunshine when she's gone, and she's always gone too long. Every time she goes away, wonder how this time where she's gone. Wonder if she's gone to stay. Ain't no sunshine when she's gone, and these always ain't no home. Every time she goes away. Ain't no sunshine where she's gone. You were kissing wasn't me, and I would never ask you now. I just keep it to myself. I don't wanna know if you're playing me. Keep it on the low, 'cause my heart can't take it anymore. If you're creeping, please don't let it show. Oh baby, I don't wanna know. Ooh.
Alrighty, and I am back. With that, let's go ahead and get this show started. Good morning, good morning, good morning, good morning, good morning, guys. My name is Sean Dex, and I welcome you back to the Mango live stream. In today's impromptu live stream, we have a lot of interesting things to talk about, but I think I may have to reduce my music a tad bit before I go any further. Okay, so let me tell you guys what the agenda for today's video is, or rather today's live stream. I want to talk about what's going on in the macro market. We can discuss the Ukraine-Russia situation a tad bit as well, but primarily I want to talk about what's going on in the bond market, particularly with the yields that we've been watching like a hawk actually for the past like 1 year now, right? Everything is actually it's funny how things are literally coming together in the last minute, right? Literally within a day or so before the close, everything is coming together. The monthly close is what I'm talking about. So we're going to be talking about the bond market, we're going to be talking about Bitcoin, and in today's video actually we're going to be talking about Bitcoin from the lower time frames all the way to the higher time frames, because there are going to be some really nice trade opportunities across time frames. So we'll go across all of the time frames, but I also want to get a read from you guys. What do you guys want me to start with? Do you guys want me to start with the bond market, with what's going on in the yields, or do you guys want me to start with Bitcoin? We will do a quick overview first on the Mango view over here, where we can see everything, right? We can see the US 10-year, the US 30-year, what's going on with Dixie, Bitcoin dominance, and also crypto fear and greed, which we talked about in the last daily video as well, where I was a bit skeptical on whether or not we see continuation, or rather on the idea that we see continuation, based on the fact that crypto fear and greed jumped all the way from like what, extremely fearful to neutral within a day, right? So that's kind of lining up as well. So before I start though, I want to get a read from you guys. What do you guys want me to start with? Do you guys want me to start with Bitcoin? Do you guys want me to start with the bond market? If you guys don't vote fast enough, I'm gonna just go ahead and make a choice myself. But while I wait, I'll go ahead and take a sip of water. Randy says Bitcoin. Cool. Hey Sorrow, how's it going, buddy? Good to see you in here as well. And Maurice, Isma says Bitcoin as well. Awesome. So yeah, I think I'm leaning towards Bitcoin as well. I think the whole picture will come together if we do talk about the bond market towards the end. But we'll touch on it a tad bit in the overview before we dive into the charts. Young Buck wants to talk about QQQQ. QQQQ. Alrighty, so I'm just gonna go ahead and get started now, guys. I should really wait for a few more people to join, but I do want to keep this live stream a tad bit short, so people who do tune in later when they do wake up can watch the stream without having to go through a 2-hour stream. So let's go ahead and switch on over to the dashboard really quickly, and here we are looking at the Mango view on the dashboard. Again, you guys can find the dashboard at app.mangoresearch.co. There's a completely free version of it as well as a premium version. For the most part, if you guys are displaying the higher time frames, you guys do not need the premium version. But if you guys are playing like if you guys are being a little bit more meticulous with your trading, then you guys will find value in the premium version. But for the most part, if you guys are just trading as a hobby and following the price action, I think the free version is good enough for most of you. Also, you guys can get free premium if you guys do use the link over here, right? Just click it and you guys will have the instructions as to how you can achieve the free premium feature. Okay, so let's get started. Here we're looking at Bitcoin. We'll talk about Bitcoin first. Looking at Bitcoin on the weekly time frame, right? We were talking about how we were within a certain range. We had resist last time when we came up upon this particular area over here, somewhere around 40,000 to 44,000. We are looking at this weekly resistance right over there, right? And we weren't feeling too confident on whether Bitcoin actually sees continuation. What do you know? We actually did see that resistance, did see the rejection, and as soon as we took out the next week or the prior weekly low, we came down to the bottom of the range. In fact, we tested the other support lines underneath as well. Now Bitcoin is back on top to back above, at the very least temporarily above the weekly range. Remember, we haven't really closed above the weekly range right over here, so this is still resistance. This level over here, guys, until we actually close above it, we are still at resistance, weekly resistance. Yes, we are living above it temporarily, but until we see that close, you have to be very, very careful of trying to front run this. You want to look through all your time frames and ask yourself, is there a trade over here on the lower time frames that will push the weekly and see us having that continuation, or are there resistances coming across all time frames that will actually close this week underneath this weekly resistance, right? So a quick we'll dive into the charts very, very soon. I'm going to show you guys how we have resistance across multiple time frames, but very quickly over here on the dashboard, if you guys are using the premium version, you can use this automatic support and resistance drawn for you over here. And I'm going to, so right initially we had the weekly support and resistance, just to make it clear to those of you who are new. These are drawn automatically by the algorithm. I'm turning that off, and now I'm going to turn on the 4-day support and resistance lines, and you guys can see that we also have 4-day resistance right overhead. We haven't even cleared it yet, or rather we're not living above it yet, right? So we have 4-day resistance overhead, we have weekly resistance overhead right on the dashboard, so keep that in mind as well. And what about the 4-day 21 EMA? Let's go switch on over. Did we close above it? Okay, so now we've switched to the 4-day time frame, and I'm going to turn on the 4-day 21 EMA. Ooh, so we closed above the 4-day 21 EMA. I actually was not keeping track of this, and we've retested it. That's actually a good sign. That's actually a good sign. So this could actually be enough for the bulls to feel a little bit more confident and start adding on more trend positions to push price above those resistance levels that we're going to talk about very, very soon across time frames. But we'll come back to this. Okay, so that's Bitcoin over here on the 4-day and the weekly. Remember, in terms of support and resistance, we have resistance overhead on the weekly, resistance overhead on the 4-day time frame. However, the good news is that we've cleared the 4-day 21 EMA at least on one candle close. Can we hold it on the next candle close, or will that resistance push Bitcoin down underneath the 4-day 21 EMA, closing it underneath, thereby not giving us a double candle close over the resistance, over the 4-day 21 EMA? Okay, so that's that over here. We'll dive into the charts very quickly, very soon, but I want to quickly go over the US 10-year yields, the US 30-year yields, Dixie, Bitcoin dominance, and neutral, and crypto fear and greed, which is reading neutral at the moment. So the US 10-year yields, guys, is currently sitting at 1.71. Okay, we are seeing a pullback of 7.8%. That is drastic. That is a big pullback. How often do you guys see a reading above 5%, about 3% over here? These things don't move that drastically, and when they do move drastically, you're going to see volatility across all markets, right? The 10-year is essentially the benchmark risk-free rate for the entire global market. Okay, the 10-year yields. 10-year yields coming down means bonds are rallying. Okay, so when yields come down, it means the bond market is rallying. And I've been telling you guys this for a good 1 year now. Yields coming down is good for risk assets. Yields going up is bad for risk assets. I'm going to show you guys the charts again after we go through Bitcoin, but I'm going to show you the charts, and I'm going to show you what I'm expecting yields to do based on certain conditions, and how we can use that to our advantage. How the rest of the crypto market is sleeping on the fact that we can really use the global macro markets to our advantage to derive edge for the bigger trades, guys. Okay, so the US 10-year yields is currently literally being the thermometer for us to put on risk and take out risk from the markets, right? So I'm going to show you guys how we can use that to our advantage. US 30-year yields is the longer dated yields, the longer dated bond markets also coming down, not as much, 2.1%. Dixie is doing well, right? It's not, you're not seeing the same weakness as you were usually seeing in Dixie, and this may be very likely due to what's going on with the Russia-Ukraine war and the sanctions being put on Russia. Essentially, there's a flight of capital out of Russia at the moment, and we've also seen Russia increase their interest rates from 10% all the way to 20%, right? So while Russia has literally increased rates, right? So the yields have gone up in Russia in an attempt to protect capital from flying out of Russia. What we're seeing on the other side of the spectrum is US yields come down, or rather the bond market is pricing yields come down. Remember, we have an FOMC meeting coming up in 2 weeks. So that's, man, there's so much to talk about today, which is why I said get freaking notes, get your notepad, notepad. So again, let me put this in context with you guys. Russia, interest rates have been set at 20%, okay? That was in response to capital flight, okay? We are seeing capital flight out of Russia. At the same time, we're seeing the bond markets rally. That is indicating to me that essentially you're seeing money flow out of Russia and you're seeing people buy US bonds, right? US 10-year treasuries. And that's why we're seeing US bonds rally, US 10 years come down, which is essentially putting the market back onto a risk on environment, in my opinion. However, there is a caveat that we'll talk about very, very soon that we have to take into consideration, okay? We have to take into consideration. There's a strong caveat. So don't get too excited just yet, guys. So this video is going to be really, really important. Get your freaking notebooks and take notes down, okay? So again, Dixie rising, which means what? People are buying US dollars in order to buy US bonds. So you're seeing US dollar strength. You're seeing Russian ruble weakness. You're seeing the Russian government raise interest rates in an order to protect the ruble from losing even more of its strength. And now Bitcoin dominance is the next thing I do want to talk about. Bitcoin dominance not really doing much, but it is sitting at an interesting juncture considering what certain altcoins are doing that may lead you to think that, hey, I want to dive into altcoins, but actually as a whole, it may not be the best idea yet, okay? We'll talk about that as well. Man, there's so much to talk about today, Jesus Christ. And then crypto fear and greed sitting at neutral, right? So this is getting a tad bit better in my on my read, in that we're not like getting too greedy too fast, but I was a bit concerned that we jumped from extremely fearful to neutral in a single day, right? So, and we did that right up against resistance, right? Right up against resistance. The markets literally jumped to resistance and everyone's fears just disappeared, which is not how you want to be. That's not what you want to see just yet, but there are good signs, right? There are good signs that we'll talk about as well. One of the signs we already talked about is the 4-day reclaiming the 21 EMA, which we haven't done, by the way, ever since we lost this level over here back in November 25th, right? We lost a 4-day 21 EMA, and ever since then we've been using it as resistance. In fact, it served as a good gauge for resistance all the way for the last pump as well, right? So that's a good sign. That's a good sign. Okay, so with that, are we ready for the Bitcoin? Julian, how's it going, my man? How's it going? You missed a really, really interesting segment on the US 10-year yields, how it relates to Russia, Ukraine, etc., etc. So you may want to rewind and rewatch that, but we can revisit it again when we dive into the charts. Now, we're actually going to go into the charts, and we're going to start with the lower time frame. Surprisingly enough, we don't do that often at Mango, but I do want to bring things into perspective for you guys. And whoa, where the hell did my webcam go? There I am back. How's it going, guys? How's it going? So before I go on any further, I want to get a quick read from everyone. How's everyone doing? How are you guys feeling about the market? Are you guys feeling up? Are you guys feeling down? What's the consensus over here at the Mango Grove? And if you guys haven't hit the like button yet, there's 50 of you over here and still haven't hit the like. What's going on? What the F is going on? Yes, that was a good 4-day candle close. I noticed that only on the stream, actually. I've been focusing on the other time frames recently, and I literally turned on the dashboard. I'm like, The seedlings were talking about the 4821 EMA. Let me go ahead and turn that on the dashboard over here and see whether we did close above it. And yeah, we did. So great stuff. Pokey says still fearful. Just gonna watch for now. Yeah. I don't think that's a bad idea at all, man. But fearful would be a bit of a strong statement. I would say that you should start looking for opportunity, right? Look for opportunity. Look for where you'd want to be putting on trades, and whether they're deeper targets all the way down to 25,000, or maybe you want to be bidding the bottom of the range over here at around 33,000. We'll be talking about potential ideas for bid opportunities. There are a few lower time frame trades, believe it or not, guys. Lower time frame trades at Mango. We'll be talking about that today. That do line up with the high time frames. High time frames are always sitting at the back of our mind. So Julian says, and taking out the 4821 EMA usually sticks the first time. Yeah, the 4821 EMA is a really good guide, man. Really good guide. But combining it with everything else that's going on at the moment, it's even stronger this time. Emery says, starting to feel bullish again, but if the war is going to be more extreme, they have been using weapons that are banned by the West. I wouldn't be surprised to see some downside, but overall bullish. I think most of the downside that will come from the war will be very quick, and will be bought back up just as quick, and you'll see immediate continuation towards the upside. Because you guys need to understand that if we, again, we'll talk about that soon. I don't want to jump from topic to topic. Yeah, the daily 21 EMA isn't the best guide. Yeah, how about this? It's a good thermometer, but you don't want to be using it as your sole trading indicator to put on trades. Pariah says, I wanted to flip 45 support, long way back down if we break 40k. Okay, so you're saying, wait. You're saying if we break. So essentially what Pariah is saying, guys, I think if I'm understanding him correctly, saying that he's only going to be looking for longs above 45,000, and if we do break 40,000 as a whole number, he's looking for a big move. I'm not sure I agree with that. I think we do have support over here at around 35,000 before we have to worry about a big deep move. But I do agree on $45,000 region being resistance over here. Okay, cool. So I'm going to go ahead and get started with what I'm seeing on the charts. Okay, we're looking over here at the 4-hour time frame, guys. And we're looking at the Ichimoku template that we use over here at Mango, which is essentially a combination of the Tenkin, the Kijun, and the 10 SMA. Okay, we also have the 200 moving average showing over here, but I'm going to go ahead and quickly hide that to keep the chart a bit neat. Okay, so yesterday we were talking about, we did a impromptu session on the Discord where we saw Bitcoin rally. We were watching Bitcoin rally on the events thingy that we did yesterday. So if you guys aren't in the Discord, go ahead and join. We'll be doing more of that in the near future, more of like these live impromptu events where we talk about the charts, talk about anything and everything, and you guys can actually even raise your hand. There's a feature on the Discord there where you can raise your hand and ask questions. So yeah, it's really cool and fun. So we were watching this move, right? But we were sitting up against daily resistance, and then the next candle got sold into, and now what we're seeing is Bitcoin get supported on the 4-hour 10 SMA. Now, we do have resistance overhead. We showed it on the daily and the 4-day, the weekly and the 4-day time frame on the Mango view. So we also have it marked out over here on the 4-hour time frame for you guys. So we're seeing the structure come up against the higher time frame resistance, and we are seeing that resistance play out. Now we come down to test the 4-hour 10 SMA. What happens from over here is going to give us a clue as to the market strength of this move. Okay, if the bulls actually step up and bid the 4-hour 10 SMA and we break past all this resistance overhead, that is going to lead me to think that we actually make our way all the way up to 50,000. It would be a show of strength. When you break out of a range, and then the first retest of the 4-hour 10 SMA is picked up and sees continuation above the next range, right, above the next resistance level, that is essentially the bull showing confidence. I'm actually not leaning towards that. I'm actually leaning towards either more consolidation or us actually losing the 10 SMA over here, the 4-hour 10 SMA, and coming down to test the 4-hour Tenkin to this entire juncture over here, the 4-hour Tenkin to the top of the cloud. So possibly a move all the way down to 40,000. Right? If we lose that 4-hour 10 SMA, we could be seeing a revisit of the $40,000 level, which could be a good level to bid. And we'll be talking about that very soon as well. You're going to see confluence across multiple time frames. Now, right over here, we're still looking at the 4-hour time frame, and this is where it gets really interesting. We're looking at the 4-hour 200 exponential moving average and the 4-hour 55 exponential moving average, which is essentially a proxy for a golden cross. And I really like to look for these usually when we are in these rounded like consolidations, because when Bitcoin tends to put in a structure where you are about to cross, or you actually do cross bearish and then immediately cross bullish again, that is actually that's like a double golden cross on the lower time frames, which again isn't really strong, but in the context of the bigger picture, if you add it all together, it could lead to enough momentum from all time frames coming together to push price up. But I would first look for the bears to retest that level. Okay, right over here, this cross that's about to happen. If we see we just showed you guys the 4-hour 10 SMA, right? And we talked about if we lose that 4-hour 10 SMA, prices are going to come down, right? So if we do lose that 4-hour 10 SMA, it's likely also going to be a retest of this juncture over here, which you already know is coming in at that golden cross retest, right? So if the bears retest that begs the question, what happens then, right? Do the bulls defend it? Do the bulls defend that cross? If the bulls defend it, then we're going to be coming back up to test the top of the range, and then we have an ascending like structure. Remember, this golden cross over here, guys, is lining up with the top of the cloud and the Tenkin Kijun juncture as well. Again, going back over here, it's the same thing, right? You're seeing it all come into confluence. So if we do see this 4-hour 10 SMA lose its level, then we're likely going to see the top of the cloud get retested. But you're also seeing the golden cross get retested. If we lose the golden cross, we're looking towards the bottom of the range over here at around 35,000. So we can essentially also put in a range trade over there from the bottom, or rather from the middle of the range all the way to the bottom of the range. That's a good like $5,000 move, right? So again, lower time frame trades if you guys are interested in that, but you're going to see how all of these trades are going to line up on the higher time frames. Again, resistance overhead, guys, resistance overhead. So over here, I'm looking for this actually to come down. I wouldn't be too eager for price to come back up, or rather to break resistance. But if it does, what do you have? You have a trade all the way from 46,000 all the way to 52,000. I do want to highlight something that Krisha pointed out yesterday, which is essentially we do have a measured move of this W-like structure, right? You guys are probably seeing it, which would line up, by the way, with this golden cross activating and seeing continuation. Usually the golden cross activating is a sign for a trend continuation to the top of the range of the higher time frames. Does that make sense? Right? Golden cross activating on the lower time frames, especially this double, it's not, again, it's a lower time frame indicator. So you guys have to keep that in mind and understand that it's not going to have as high of probability as, let's say, the monthly levels that we talk about, right? But all of this is coming together, guys, on monthly support, right? Especially if we see this come down over here and get defended, that's going to be very, very close to monthly support. Monthly support's right here, guys, okay? We've been talking about that for months now. You guys don't need me to go through that. But what that's going to mean is you're getting a double golden cross underneath just before monthly 10 SMA resistance, which we'll talk about very, very soon, and then coming down on over to monthly support and pushing price up, giving us the momentum to push price up. You guys will get the entire picture very, very soon. Just take notes, because this video is going to be really, really important for how you guys set up your trades for the entire next couple of months. So again, we were talking about Krisha's measured move. Krisha's measured move is essentially this range here. You can take this range of this W-like structure, which is pointing to essentially all the way to the top of the range, right? What did I just say? The golden cross the double golden cross on the lower time frames usually is a good indication of trend continuation to the top of the range of the higher time frames. And the high time frames over here is the monthly time frame. And the monthly time frames top of the range is what? $60,000, $58,000 to $60,000, right? So it's all lining up over here. Okay. What else do I want to talk about? I want to quickly show you guys how these golden crosses have historically worked. You guys can see that we crossed bearish over here and we saw the move towards the downside. Again, let's hide that. We crossed bearish over here, didn't see that much of a move towards the downside, and as soon as we crossed bullish over here, we did have a nice run to where? The top of the range, right? So essentially, in a way, a double bullish cross, where we crossed bearish and immediately crossed again bullish. Now, where was the last bearish cross? Bearish cross over here, and we saw a nice dump towards the downside, where? To the bottom of the range, right? All the way down to $30,000. Where was the last bullish cross? Last bullish cross was all the way over here, actually, at 10,600. What? The last bullish cross was at $10,600. So we got one at 10,600. We got one at around 30,000, and we got one over here too. Each one of those signals were pretty good, guys. They're pretty good trades. They're pretty good trades. So we have to keep that in mind. Okay. We haven't got it over here yet. This time around, guys, and think about that, Julian. If you're watching over here, did this line up with the 2-day dynamic? Yeah, it did, right? It did. So Sherwin, you're here as well. That was actually a good trade for a trend trade. If you look back if you're keeping this really simple, and you look at only the 2-day time frame, that was a good trend trade, right? But our mistake was the trade that we took. For those of you who are joining us for the first time, we took a trade based on the 2-day dynamic. I'll show it to you guys very soon. And the mistake was that we didn't take into consideration that the Tenkin, the monthly Tenkin, was not reclaimed yet. So the monthly 10 SMA became resistance that we should have taken profit at, and this is what we missed, or rather we chose to ignore because of our biases, right? I wanted the big win. Monthly 10 SMA was right over there, guys. This red box, right? Essentially, that's where the monthly 10 SMA was. We should have said, okay, hey, we're seeing all of this confluence, but monthly 10 SMA, monthly Tenkin overpowers everything. Monthly Tenkin was not reclaimed. Monthly 10 SMA right overhead. Take your profits. Be happy with your trade. But no, that was our mistake. We live and learn. Okay. So essentially, my winning trade turned into a loser. Those are some of the most painful losses, where you have those profits and then they turn into losers. In fact, my loss ended up being more than my win was. It's freaking stupid. But anyways, now again, we talked about this, so we can move on, right? Any questions on this for 10 SMA? Yeah, the golden nuggets are coming thick and fast today. Yeah, I told everyone in the beginning of the stream, get your notes. I'm going to be going fast, and I need water too, because I'm likely going to have a parched mouth at the end of the stream. You love it when I say over here. Over here, I'll say it all. Okay. Okay, cool. What else? Okay, I think we covered everything we need to on the 4-hour time frame. Again, there's some really nice trades. If we do come down over here, the $40,000 level is going to be a big opportunity, and if that trader ends up being a loser, it is essentially telling you that the bears are winning that battle at the middle of the range, and the bulls are not looking to defend this golden cross, right? It will be giving us information, right? So you can use your loser to turn it into a winner on your next trade, because that next trade is a short to the bottom of the range at around $35,000. Okay, now over here, we are looking at the daily time frame. The daily structure is really beautiful, really simple to read, very easy to spot out the W-like formation. And again, the same W-like formation is pointing to the top of the range on the monthly. So it's very clear to see the resistance over here, right, on the daily time frame. So we're seeing it on the daily, we're seeing it on the 4-day, we're seeing it on the weekly. We have resistance overhead. If we break this range over here, we're likely going to be pointing to $52,000. But here's where it gets interesting. You can play the ranges. By all means. But now, if you combine the fact that we are seeing 4-hour golden cross, double golden cross, breaking its structure, right, that W-like formation on the 4-hour time frame, activating the trend trade towards the top of the range. If you want to play the ranges, I would suggest Okay, again, this is not financial advice. I would suggest leaving at least 20% of your trade in for a potential continuation to the top of the range. It will also make it easier for you to bid a retest of this level over here and add your entire position back. So let's say you have 20% of your position in, you can add another 80% to get a full position. Of course, I'm simplifying the math, and now play the next range trade, right? Now over here, you can take your full profits. Again, depends on your strategy, but this is what I would do personally, considering what we're seeing now, especially with the reclaiming of the 4-day 21 EMA, the 2-day dynamic, etc, etc. Okay, so yeah, the daily is showing this. However, we had resistance. However, we haven't cleared this yet, right? So what should we be looking for, considering we are at resistance? Well, we should be looking for us to come down to the bottom of the range. Now I'm going to show you guys what's going on the cloud over here, and this lines up with what we talked about on the Grove. I showed you guys screenshots of this, but we also talked about this on the live event yesterday. So again, if you guys are not in the live in our Discord, go ahead and join themangoway.com/Discord. Okay. So this gets really interesting, guys. Over here, we have broken into the Kumo. We have broken into the cloud. But I'm not seeing what I want yet for continuation to the top of the cloud. Not at all. What I like to see for continuation to the top of the cloud is firstly, this bullish TK cross. Okay, so the Tenkin needs to cross over the Kijun. We're not seeing that. Okay, let's say this flat line over here is the Kijun, guys. Instead, what we're seeing is the Tenkin come up and then swing back down, right? So the Tenkin is actually moving away from the Kijun. The good news is that the 10 SMA is moving up, right? That's good. That's expected. So what I want to see now, guys, is the Tenkin cross over the Kijun as well as the 21 EMA cross over the Kijun and the Tenkin, right? So we don't have that entire picture yet. 21 EMA is now officially over the Kijun, good, but the Tenkin's not there yet. Okay, so what I usually look for when I see this, when I see a failure of the Tenkin to actually cross into the cloud with the Kijun, is I am more likely to be looking for this move down to retest the Tenkin and 21 EMA when they do cross. So even if the Tenkin does cross the Kijun, which is a weak bullish cross, considering it's a red cloud, if you guys are on the seed program, revisit your Ichimoku theory and your Ichimoku modules, because now is going to be the time for all of it to pay off. It gives you a proper read and a gauge on how to play the market. Tenkin crossing over the Kijun, 21 EMA as well, looking for that retest, and then I'll be looking for that edge-to-edge trade to the top of the cloud, right? Does that make sense? And what does that line up with? What does that line up with? It lines up with what we talked about over here, the bottom of the cloud being retested on the 4-hour, or top of the cloud being tested on the 4-hour time frame, with also the 4-hour golden cross being retested. All of that coming together with our retest of the bottom of the daily cloud and the Tenkin Kijun cross. You see all that confluence come together? You guys are going to see some more confluence over here soon. And I'm going to wrap up the video right after that. So if you guys have any questions, make sure you guys note them down right now. Okay, so daily again pointing to the same thing. Okay, we have resistance overhead, potential pullback, but the pullback's going to be a buy opportunity. Losing the Tenkin Kijun. What I say in yesterday's stream on Discord, guys, I said if we lose the Tenkin Kijun, likely going to come back to the bottom of the range and retest these lows over here at 34,000. What does it line up with? It lines up with the same thing that we talked about on the 4-hour structure over here, right? 34,000, 35,000. So it's like, it's beautifully symmetrical right now to play the ranges. Top of the range, 45,500-ish. Middle of the range, 40,500. Bottom of the range, 34,500, right? Note it down. Very easy trades coming our way very soon. In fact, this is a nice short trade over here at the moment on the lower time frames, if you guys are interested in that. Okay, so now we covered the daily. Now it's time for the monthly. Okay, I want to quickly show you guys the range over here. Okay, I have these red boxes lined, drawn. Okay, do you guys see these red boxes drawn? I'm going to switch on over to the monthly time frame. Right over here. Yeah, these are the same red boxes on the monthly time frame. Same red boxes on the monthly time frame. And what's it lining up with? The monthly 10 SMA. Right, so the red box, guys, is actually lining up perfectly with the monthly 10 SMA resistance as well that we've been eyeing ever since freaking December, right? Or November, right? Somewhere, yeah, November. So we said if we lose the monthly 10 SMA at the end of the year, which is essentially December, this candle over here, if we lose that, we'd be looking for a price to come and test this juncture over here, which is the 21 EMA, Tenkin and Kijun juncture. And we did see that. We did see that, exactly that. So again, we have to respect that level. That level is being played by the market. You guys can see all of these candles here. Every single freaking one closed above the 10 SMA. As soon as we lost the 10 SMA, boom, to the bottom of the range, right? So this is a very, very key level. Respect it. Respect it. It's right overhead on your W-like structure that everyone's watching that level, guys. Everyone's watching that level. When I say respect it, you got to respect it as resistance, but you also got to respect it as support if we reclaim it, right? We haven't reclaimed it yet. But on the low time frames, we might be seeing signs. We might be seeing signs of when, how do I put this? On low time frames, we might be seeing signs of when we can be confident on this monthly actually closing above the 10 SMA, right? So the low time frames has everything that we, the clues that we talked about, the golden cross, the revisit of the Tenkin and the 21 EMA. We see that bounce, or rather that pullback to the Tenkin 21 EMA on the daily, on the 4-hour golden cross, and then we bounce back up and seeing that trend continuation. We may see a candle that looks a little bit like this, right? Maybe a wick, right? I'm trying to draw it. I can't clearly. Maybe a wick, a shadow, and I'm closing somewhere underneath 56,000. But we may reclaim the 10 SMA if we see all of that. However, until we actually see the lower time frames give us those signs, you can't get excited for that. For now, you have to say, hey, it's resistance, it's resistance, it's resistance. So monthly 10 SMA resistance. What else do we have? Okay, now I think I want to talk about US 10-year yields. Again, everybody was sleeping on this, and we marked out these ranges over here, right? We marked out these ranges over here. Around 2%, the top of the range, and 1.75% at the bottom of the range. So, what are we seeing over here? I'm gonna let you guys pitch in a little bit, and I want you guys, because I've been talking about, I'd rather explaining everything over here for a while now. I want to gauge how much you guys understand, right? And accordingly, I'll explain deeper, or I'll just give you guys a quick overview of what's going on over here. I'll also take a sip of water. Surf says 25,000 inside for me, head and shoulders right in front of us. Don't know. Am I delusional? No, man. Why? Don't doubt yourself. Don't doubt yourself. If you have a strong analysis, don't doubt yourself, man. You know, one of my biggest mistakes as a trader in the beginning of my journey was doubting myself and not trading my own analysis. And then the trade, that analysis actually playing through, and me going like, damn, had I only like believed in myself, I would have made money. And that pain sits with you. So you rather lose money trading your own analysis than follow somebody else's analysis and lose money and realize that your analysis instead would have been the money maker. So just always follow your own analysis and learn from your losses. So if you guys are seeing something that I'm not, it doesn't mean that you guys are, or rather, if you guys have a analysis that is completely polar opposite to my analysis, then don't doubt yourself. Don't doubt yourself. And remember, I'm saying that we're at resistance over here. I'm saying that we're at resistance over here. So you guys could be right. You guys should look at the bearish side of my thesis, right? Even though I'm saying that if this happens, we go up. Remember, I'm saying if this happens. If it doesn't happen, it means we're going down, right? And that's what you guys should cling on to if you guys have a bearish sentiment. Okay, so right over here, we're looking at the US 10-year yields. We've been talking about how as yields go up, prices are likely going to take a hit. Okay, risk on assets like Bitcoin, like equities, are not going to do well under this environment. You usually want, especially when it's threatening to break around 2%, that's going to put a lot of pressure on the market, and that's what we were doing for the past, like, we broke out of this range. We've been watching this for like an entire year now, ever since March 2020. Yeah, it's literally been 1 year now. We've been watching it ever since this range, guys. Okay, this range, we really liked seeing this. This not so much, but then this, and then as soon as we broke out over here, this was in around December, Jan. That was essentially the market saying that we are pricing in the Fed increasing rates, right? Leading into the FOMC meeting, the market already started pricing in the increase of rates, and that is bearish for risk on assets. However, now, remember what we said in Jan, and we said this very specifically over and over again, and it's all playing out towards the end, the final moments of the candle close. We said that leading into March, we are expecting a rally. Go back and watch the videos. Go back and watch all the videos. And we got that clue not because we're geniuses or we're oracles. No, it was because of this chart, guys. It was because of this market. We are looking at the 2% resistance line over here, and we're saying, hey, the market is pricing in the interest rate hikes. And now leading into March, everything that has to come would be already priced in. And there's only one place for the market to go, which is down in terms of the yields. Yields are going to come down because everything else is already priced in, unless the Fed surprises and says we're going to be doing 15 rate hikes, right? Because the market was pricing in something like 7 freaking rate hikes, right? And then that kept getting reduced as markets started taking more and more of a hit, right? So we saw it come up right up against our resistance level. We failed to close any single one of these weeks, even though each one of these were very scary, where it looked like we were going to close above it. Each week closed underneath. And we're talking about the bond market here following TA, okay? The bond market is following TA. Remember, when yields are going up, bonds are actually coming down. Bonds are getting sold off. When yields are going down, bonds are getting picked up. So over here, what you're seeing, guys, is bonds rallying. And where does it stop? It stops right at a support level, okay? These were lines that we had drawn a while ago, and you're seeing it get respected. So this is really important. Now we're seeing support. So yields have support. Okay. What does it mean? It means that we could likely see this actually go up over here. I'm not expecting that, but it is right here on the charts, and the charts don't lie. At least temporarily now. Temporarily, we might see bonds actually have some profit taking because bonds rallied. This candle here is essentially telling us bonds have rallied. We are seeing this line up with our daily, weekly, 4-day resistance. You guys are seeing the whole picture come together. This support here, right, is bad, right? Let's put it that way. It's bad, right? At the same time, we have shown you how we have resistance over here. We have resistance over here. We have resistance on the monthly time frame, right? Coming in, right over here. Monthly time frame coming in right at the time that yields have come down to 1.75%. Now, what are we looking for Bitcoin to actually see continuation? Well, we're looking for this level to break. Looking for 1.7 to break, and we're looking for a level to come down, a price to come down to this juncture over here somewhere. What's the breakdown point? I would say around 1.5 to 1.48. 1.5. Let's say 1.5. Right? So if we do see that, that's going to line up with Bitcoin also doing really well. Okay. However, if Bitcoin breaks that resistance level that we talked about, that would be enough. That would be enough, in my opinion, to see Bitcoin actually see the continuation, even if yields go sideways, even if we see this go sideways over here, right? But if this actually breaks down, that's going to line up with not just Bitcoin going up, guys, but the entire equity market is going up too. A lot of assets like ARK, etc., that have taken a massive hit are likely going to see some rally on this, some strong rallies on this coming down over here. Okay. So yeah, the last thing I do want to talk about before we wrap up is keep your eye on the next monthly close. We are closing a new 3-month candle, which is actually pretty important. We're looking at BLX right over here, and I'm going to turn on the Ichimoku. And you're going to see that the Tenkin has been a good gauge. The 3-month Tenkin has been a good gauge as to whether or not we're going to be sticking to our bull market trend. And we came and tested that Tenkin, threatened to close or threatened to live underneath it. We didn't really, and this has been 1, 2, 3, 4 months now of consolidation above the Tenkin. Beautiful, beautiful test. And now this picture is going to look really, really good, guys, if we can close the 3-month green. We close the 3-month anywhere above, actually, if you can even take out the high, if you can close this into like a proper full body hammer, right? If we can close the 3-month as a full body hammer where we have no shadow, and we can do that if we can close above, what's the high? The high is currently sitting at around 47,943. So we close above that. That's going to look really, really, really good, guys. Really, really good. And I'll be looking for this to retest the highs over here around 70,000. So you're seeing a lot line up, right? And again, let's go back historically over here. You're going to see that throughout this entire bull rally, we closed above, closed above, closed above, closed above, closed above each time. And as soon as we closed underneath, that was really bad. Retested it, bear market, came back up, closed above it, did not, however, see a double close the next candle. I mean, you can't really wait for a double close though, right? Keep in mind that during this period here, I was bullish, right? You can't really wait for a double close, and then the next 3-month candle closed underneath, and then stayed underneath, stayed underneath, stayed underneath, closed above, and boom, and we're still above. All right, so with that, guys, I'm going to be wrapping up the stream. We've been on for 55 minutes. I don't want to run this one too long, but I hope you guys enjoyed the stream. Any quick questions before I wrap up? Before I end the stream. I see a few of you have joined the Mango Discord. Good to see you guys in here. Again, those of you who haven't joined yet, make sure that you do take advantage of the great community that we do have. You can find us at themangoway.com/discord. All right, so with that, I'll see you guys in the next one. Do the mango way, do the easy way, do it the stress-free way. I almost forgot our own catchphrase.